On November 18th, Alibaba reported disappointing earnings. They had a decrease in net income, decrease in free cash flow. They had slowing organic growth in their core commerce business, which makes up a majority of their revenues. They decreased their guidance for the rest of 2021, and there's 2 quarters remaining. They had slowing growth in their cloud computing section, which is supposed to be and is anticipated to be a large contributor to net income in the future. Now I'll go ahead and lead off. Alibaba's fair valuation is substantially higher, and I think they're around $300 to $350 a share. And I've said that over multiple videos. So why in the world would I sell when I think their fair value is much higher? But before you fully understand why I sold Alibaba, you have to understand the events leading up to it. First off, there's a lot of negative sentiment around China to start with, right? We have regulation concerns, we have Evergrande, we have power outages. There are several things that are occurring with Alibaba specifically and China that have concerned investors. Now, that has not deterred me, and I think it's largely overblown. The one thing we could rely on Alibaba for was financial strength in their earnings. And I was looking towards their next earnings, which is this previous one in November, to give us a little bit more of a bump from where we are. Not just news that Bresh Probrai or Charlie Munger were buying the names. That's nothing that should get you excited to go in and buy a name. Alibaba has strong financials. They have strong growth for the future. And so those are the reasons why you should be buying. But when I saw that they had weak financial guidance, they had weak things, I thought, hey, we have all this negative sentiment on China. We have now negative financial sentiment. Now's a great opportunity to go ahead and harvest the losses I have on Alibaba, wait the 30+1 days to avoid a wash sale, and take advantage of the tax savings in my current fiscal year. Now, do I think Alibaba is worth $140, $130, $100 a share? No, their really fair valuation is closer to $300. And as I stated before, I anticipate to buy back into Alibaba once my wash period is over, sometime around mid-December, late December. That's when I'm going to get back into Alibaba. Granted, they're not at $350 a share, and I missed the boat, and I made a dumb mistake to get out. So I'm sorry if it upsets you that I sold Alibaba, but I have to do what's best for me holistically as an individual, as an investor. So taking advantage of these tax savings now is a big incentive for me this year to go ahead and sell Alibaba. And I'm really hoping I don't miss the boat and I'm able to get back in and enjoy Baba's future growth moving forward. Now, the reason why I'm so confident in selling and waiting is not because I'm an expert at timing the market. It's just because I'm looking at Alibaba's financial weakness, and that is something that people were not expecting. And I think it's going to continue to drag on until they have their next earnings call, where they have the opportunity to prove us otherwise and show us how they're going to get past what their current headwinds are. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. Also, if you found anything helpful in this video, please hit that like button. My name is Frank Finance, out.